This is Asia Trade. I'm Shery in Tokyo. The top stories this hour. Asian stocks set to extend Wall Street gains led by tech giants including Nvidia and Broadcom. The revival of the AI trade halting 2 days of declines for chip makers. Samsung's second quarter earnings also set to boost sentiment as profit surges past elevated expectations on rocketing demand for memory chips. And the former Japanese currency chief tells Bloomberg the yen is undervalued up to 20%, but Goldman Sachs now sees it weakening to 165 per dollar.
I'm Haidi Stroud-Watts in Sydney. Take a look at the setup for trading across Asia. As Shery mentioned, is really about this buoyancy when it comes to AI, chip-related trade. There are lots of drivers that we're seeing. As Shery mentioned, a lot of those coming from the Wall Street session as well. That rally from several US tech giants, reviving confidence that this bull market still has some more room to run. Plenty of drivers in this part of the world as well. In Asia, with semiconductors, the Kospi index in particular in focus. We had Samsung Electronics reporting profit that beat estimates. SK Hynix kicking off that formal marketing process for its US listing as well, that $28 billion US listing that we're watching. So sentiment will be supported when it comes to that tech front as well. At the moment, we are seeing a pretty flat picture of last trading when it comes to Kospi futures, Chicago Nikkei futures, also looking pretty flat, despite we're expecting, of course, that continued benefit from the yen, but lots of discussion as to where that next level will be for that weakness in the Japanese currency. Switching out the board to take a look at what else we're watching, and oil is in focus as these conversations around a potential glut scenario continue to get louder, holding that drop on these concerns of growing oversupply. Mostly New York traded crude up just about 0.3%, but there has been a lot of conversation with Saudi Arabia slashing prices, traffic through the Strait of Hormuz continuing to pick up. Saudi Aramco saying that it would lower its Arab light oil to Asia next month by $11 a barrel, so below the regional benchmark that is. And we have seen now Brent, the latest benchmark, to fully erase that war premium that's built up since February. So now we're hearing from some leading banks that there's a risk that that supply glut scenario might return. But Shery, as we look ahead to the start of trading in Asia, it's hard to get around the fact that the spotlight is firmly back on the AI and tech trade.
Yeah, especially Samsung setting sentiment for the markets today, reporting operating profit for the second quarter that beat the average analyst estimate. Let's break down the results and their impact on the trading day in Asia with Bloomberg Intelligence senior analyst Masahiro Wakasugi, markets reporter Anthony Stevens, and chief Asia FX and rates correspondent Ruth Carson. Masahiro, let me start with you because we just got the Samsung numbers a few minutes ago. We still don't have the full picture. The full results are coming later this month. But what stands out to you, other than the fact, of course, there's a 19 times profit beat that we were expecting earlier?
Samsung's number was really strong, and it beat the consensus by around 6%, and the operating margin achieved 52%. And the number looks really good, but no big surprise. But we have to remember that the Samsung number should include special bonus cost in the second quarter, and also probably the first quarter provision should be also included in the second quarter. So actual operating profit might be much better than the number which they reported. So I think that meaning that the AI chips are really doing great, and the average selling price increased significantly in the second quarter. So overall picture looks quite good.
And yet when it comes to market reactions, it's always sort of buy the rumor, sell the news, because we're seeing on next trade right now, Samsung falling almost 5% after the results were released. When it comes to the broader picture, though, we had solid results from Micron as well. What are the indications for the industry itself?
I think that still the AI investment is really strong, and we are hearing that many companies are trying to adopt the AI going forward, and the physical AI, autonomous driving, or we have to do a lot of things by using AI. And in that sense, still we are hearing that the memory demand is really strong, and the memory companies have to invest and expand the capacity to keep up with the surging demand. So in that sense, we are seeing the similar picture, and which is really strong in the AI era.
Anthony, I love this from your morning note. In Asia, tech is the micro, and everything in between. Between Hynix and Samsung, is this the next set of catalysts that investors are looking for?
Look, these results are very strong on the face of it, as Masahiro just said, but it's the forward positioning that is up for play here. That is why Hynix trades at 100 vol, Samsung is at a 95 vol coming into today's results. So you saw that early drop in Samsung, down 5% to start the day. That was actually its implied move. That's what people were expecting as a base case. So that's how volatile Korea has become. So we are in for a very long session as the market kind of digests the strength of these numbers towards the top end of estimates and tries to understand how much of that is sustainable going forward. And we saw that in the US session as well. A lot of volatility around the memory space, different parts of the memory ecosystem trading wildly different, with Western Digital quite strong, and then SanDisk wiping out a 3% intraday gain. So it's a very volatile space. Now, in terms of macro, as you alluded to, Samsung and Hynix are pretty much the Kospi. It's 40% of the Kospi. It's between Samsung and Hynix, they are a reasonably large chunk of the MSCI Asia Pacific Index overall. And of course, as I'm probably guessing Ruth is going to touch on, they're a huge part of the FX trade in Korea. And one of the important parts of that trade is the fact that Hynix is doing this ADR, is launching this ADR, and is going to be trading to the back end of this week. So the Samsung results really set up that ADR for the kind of the bullishness or the narrative around that is necessary to drive that ADR. So today's result is the first kind of news point in this memory trade, which is going to absolutely dominate Asian trading this week.
Yeah, let's turn to Ruth, because to Anthony's point, we do have that SK Hynix $28 billion U.S. listing, right? That was supposed to sort of give a boost to the Korean won as well, according to analysts, because of the repatriation of funds and investments into the South Korean AI industry. And we've also seen news about round-the-clock trading for the Korean won already happening this week. Plenty to digest. What's happening to the currency right now?
Absolutely. On the macro front, investors, FX traders are definitely keeping an eye on the won. We've just had the first session of 24-hour trading, and it is interesting. It's coming at a time when, all the ADR stuff is happening, but also investors that have pumped lots of money into the South Korean stocks, for that AI theme, actually, repatriating some of their funds as well and taking profits. So lots of things happening there influencing the won. But ironically, it is still one of the weakest major currencies in the world this past year. And that sort of speaks to a number of things. Rate differentials is one, but also the fact that, there is that, push to invest overseas by the locals as well. And that's actually influencing where dollar Korea is trading. So definitely keep an eye on this. And also, perhaps, it is a good thing that we're having 24-hour trading now on the won, because in a way that could help with volatility and smoothing it out as people take positions around the clock.
Ruth, and maybe not just kind of being swept along with the tide of the yen, right, which appears to be catching exactly zero breaks still.
Yeah, absolutely. Yen definitely cannot catch a break. Doesn't matter if you're talking to long-only investors. Definitely, as you speak to the hedge funds as well, it's incredibly hard to find anyone who is brave enough to buy the yen at the moment. If we look at the latest CFTC data, it does show that further yen weakness is coming. Hedge funds are the most bearish on the yen since 2007. And again, this is happening at levels where, you're looking at 162. The threat of official intervention is definitely there every minute of the day, but yet investors just can't help shorting the yen because of all the risks in Tokyo when it comes to fiscal policy and the judgment that the BOJ is behind a curve when it comes to raising rates.
And Masahiro, of course, we continue to watch the tech sector here in Japan as well, and the idea right now is that if we get a weaker Japanese yen, according to Bloomberg Intelligence, in fact, we could see more upside for anything related to semiconductors here in the market as well. When we look at what's happening to Samsung, at Micron, at the broader industry, how does this bode for other semiconductor-related areas?
So what we are now seeing is that AI companies are investing in not only training but also in inference, and in that case we have to have a little bit different memory storage systems going forward. So so far we saw the very big demand for the high bandwidth memory, and which is a kind of DRAM. But going forward we have to have some other types of the storage made by NAND flash memory. In that sense, Samsung has both in the NAND and the DRAM, and SK Hynix as well, Micron as well. And NAND specific company Kioxia is also investing. So in that sense, broad industry is investing, and which is good for the materials or equipment. So maybe the supply chain wise, really hot timing, hot demand will continue going forward.
Anthony, looking at the markets now going forward, I mean, you mentioned the SK Hynix U.S. listing, of course, as another catalyst when it comes to the tech names broadly. What will you be watching in terms of other potential elements that could make an impact this week, given that we also have treasury auctions, we have also central bank decisions across Asia as well?
So the picture around positioning on the tech trade is meeting a very complex picture around the technology. So again, as Masahiro touched on, kind of this evolution from training models to inference models is a completely new kind of demand on memory, and people are trying to be more efficient around memory. So that is a huge part of the technological progress that we have to keep an eye on. At the same time, positioning is evolving very rapidly. You saw hedge funds taking down the tech trade very aggressively in the US. And now in that context, what they decide to reload in the Hynix ADR will be very interesting. In terms of Korean domestics, that they are very exposed to their own market as foreigners continue to sell. We have triple-digit billion net selling now. That's in the context of a market that I have to remind people, has grown by trillions of dollars in market cap. So it's not a big deal in aggregate, but at the margin, position is evolving very quickly. And lastly, you have this rotation aspect as the economic growth kind of widens in Japan, in the US. So do people want to do things other than pile into the tech trade in the short run? Lastly, we are working night and day, but it is summer. So in terms of the seasonality around forward returns from a very high momentum trade, it's starting to look a bit stretched, and we are seeing momentum struggle in the US for the first time in a long time.
Right, speaking of momentum, there's now sort of increasing murmurs that maybe the run in the yuan has reached a point where it's going to take a pause. JP Morgan Asset Management is just one of those voices. How much of this has to do with the dollar now resuming, traders now resuming the view that the dollar is going to be mostly positive from here on in?
Yeah, absolutely. A lot of it, when it comes to momentum, regardless of what currency you look at, it does come down to also what the dollar is actually doing. As we all know, FX trades in pairs. So when it comes to the dollar, absolutely, investors of all ilks, whether they're hedge funds through to your long-only managers, they are in aggregate the most positive on the dollar since 2015. And that comes down to what the Fed is doing, what the Fed is signaling. We've got a new Fed chairman, Kevin Walsh, obviously there, also talking about price stability here and targeting prices. So all this is definitely giving a boost to the dollar, because macro investors are going, look, this is a hawkish Fed. We, as a result, are going to focus on rate differentials, and that, of course, will weigh on currencies, including the yuan, where we know it is a managed currency ultimately, but is still also impacted by the dollar.
Ruth Carson there, our Chief Asia FX and Rates Correspondent, along with our Bloomberg Intelligence Senior Industry Analyst, Masahiro Wakasugi there in Tokyo, and Anthony Stevens, our Markets Reporter in Hong Kong. Well, still to come here on the Asia Trade, President Trump says the end of Russia's war in Ukraine is getting much closer as he prepares to head to the NATO summit. We'll get the latest from Ankara next. This is Bloomberg. Take a look at what we're watching when it comes to broader commodities, and the conversations around oil and the threat of a potential glut situation continue to get ever louder. This as we now have these concerns that potentially with the return to market, the more steady flows through the Strait of Hormuz, we've got Saudi Arabia cutting prices there as well, that this is all sort of starting to create the narrative that perhaps oversupply is something in the near term that we should be watching out for. That in addition to the fact that perhaps we see lower demand levels out of economies like China as well. At the moment, though, we are seeing really a pullback. New York traded crude had been up by about 0.25%, but that's even pulling back a little bit as well. Gold also falling as traders continuing to reassess that outlook when it comes to the Fed ahead of those FOMC minutes. Well, President Trump says Russia's war on Ukraine is closer to ending after he spoke by phone on Saturday with Vladimir Putin. Trump is also expected to meet with Ukrainian President Volodymyr Zelensky at this week's NATO summit in Turkey.
President Putin wants it to end. I will tell you that very strongly. What a good call. And President Zelensky actually wants it to end now. And we're going to be going to NATO, and we're going to be talking about it. And I think we're going to get it. I think we're going to get it ended. It's been a terrible situation.
Well, NATO chief Mark Rutte has cautioned that the alliance doesn't have an endless supply of missile interceptors after Zelensky requested more to repel Russia's airstrikes. Bloomberg's Oliver Crook has more from Ankara.
The leaders of the 32 nations that compose NATO will assemble here in Ankara, Turkey for their annual meeting, following on that historic meeting a year ago in which all of these nations committed to spend 5% of their GDP on military and defense spending. In that year, of course, the war in Iran has dominated the conversation, has created a real front relationship between President Trump and a number of the European leaders that he will be meeting over the next couple of days, primarily with the Chancellor of Germany, Friedrich Merz, who said Trump was being humiliated in Iran, and, of course, an escalating dispute between President Trump and the Prime Minister of Italy. For the Europeans, the goal here is very simple. It is to not upset the President of the United States, to not rock the boat, and to advertise on some of the accomplishments they've made over the last 12 months in terms of that defense spending. Secretary General Mark Rutte speaking on Monday, saying that they're going to get some very serious concrete plans in terms of spending tens of billions of dollars of commitments. For President Zelensky, who will also be attending the sidelines of the meeting and meeting with President Donald Trump, it's a chance for him to build on some of the diplomatic efforts he started at the G7 meeting a couple of weeks ago to try to bring President Trump back into the negotiations with Russia and back in on the Ukrainian side. And finally, for President Erdogan, who is the host of the meeting, it is an opportunity for Turkey to display its military might and, of course, its diplomatic chops. It's played crucial roles in negotiations and discussions between Russia and Ukraine, with Iran, and a number of the other conflicts within the Middle East, to say nothing of the personal relationship between President Erdogan and the President of the United States. Donald Trump said had this meeting not been held in Turkey, he may not have attended at all.
Well, Indian Prime Minister Narendra Modi is in Indonesia as he begins a three-nation tour that will also take him to Australia and to New Zealand. Bloomberg's Paul Allen joins us now for more. So what's the purpose of this particular tour?
This is really a continuation of the long-standing look east policy that India's had since 2014. So in Indonesia, it's a chance to build, strengthen ties. There'll be conversations around defense, particularly in the Indian Ocean, trade as well. And then later on, both the President Subianto and Prime Minister Modi are going to head to Yogyakarta, which is home to the UNESCO-listed Hindu temple of Prambanan. There's a joint effort on conservation work there. Then it's here to Australia to deepen the relationship. This will be the third India-Australia annual summit. Focus there, also defence, but also a focus on critical minerals, supply chain resilience. And then Prime Minister Modi rounds out the week in New Zealand. And New Zealand, of course, signed that free trade agreement with India back in April that eliminated tariffs on almost everything, except to do with the dairy sector, of course. But very historic visit there. First time in almost 40 years an Indian Prime Minister has been to New Zealand, way back in 1986 with Rajiv Gandhi.
Last time we had Narendra Modi in Australia, huge stadium events. I mean, there's a massive diaspora here, right? Is that what we're expecting this time as well?
Oh, absolutely. And Prime Minister Modi really seems to enjoy these things. Wherever there's a large Indian expat population, he'll do one of these. And he seems to really like it. And Anthony Albanese joined him here in Sydney back 3 years ago and really enjoyed some reflected glory there. You know, he heaped praise on Narendra Modi, called him the boss. The crowd ate it up. It probably did a lot to rebuff Anthony Albanese's reputation with that community as well. So yeah, same thing this time, except in Melbourne, 26,000 expected at a stadium event. Narendra Modi will also visit the Melbourne cricket ground, and of course, if you can have a meaningful conversation about cricket with an Indian Prime Minister, you're well on your way to having some good relations there as well. And then in New Zealand, it'll be the same thing in Auckland. There is even a website for the Kia Ora Modi event. 13,000 expected there, and New Zealand Prime Minister Christopher Luxon, not ignorant of the opportunity, he'll be there as well, and we'd expect him to bask in a little bit of the reflected glory as well.
Yeah, Bloomberg's Paul Allen there with the latest on Narendra Modi's diplomatic tour there across Asia. And here are some of the top global headlines that we're following. President Trump has confirmed he called FIFA chief Gianni Infantino to review the World Cup red card suspension of U.S. star Folarin Balogun. FIFA has not explained why it overturned the suspension, but Infantino told a German news agency Trump's call did not influence the decision. The governing body has also rejected an appeal by the USA's next opponent, Belgium, meaning that Balogun can play in today's knockout round of 16 match.
Yes, I asked for a review by FIFA. I spoke to a man who's highly respected, and by the way, whose level of respect has gone up tenfold. And he was good before this started, but you know, he really pushed it in this country. I'm the one that got them to do it.
Prosecutors have told the impeachment trial of Philippine Vice President Sara Duterte that they have adequate evidence to convict her on allegations of corruption and threatening the life of the president. Her trial began on Monday amid tight security with some 6,000 police deployed to the Philippine Senate. Duterte did not attend, but her defense team called the charges baseless. Chinese state media say floods triggered by Typhoon Maysak have forced around 48,000 people from their homes in the southern Guangxi province. 2 people were reported killed. The National Meteorological Center expects heavy rain to continue until Wednesday across parts of southern, central, and eastern China. We have more ahead on the Asia trade. This is Bloomberg.
Let's get you the latest from the corporate front. And SK Hynix has begun the marketing process for its US listing, seeking to sell nearly 18 million American depository receipts. The memory chipmaker is looking to capitalize on strong investor demand after its Korean listed shares surged about 260% this year, pushing its market cap above $1 trillion. The ADRs are expected to begin trading on the Nasdaq on Friday. Broadcom says it will provide new custom chips to Apple in an expanded partnership that now runs through 2031. According to a filing, the companies will partner on ASIC silicon for multiple generations of Apple products. ASIC chips are increasingly vital to the development of components for AI-related tasks. Microsoft shares slipped after it told staff at its Xbox unit of plans to cut around 3,200 jobs, or about 20% of the workforce. It also plans to divest 4 of its video game development studios. Xbox CEO Asher Sharma wrote that the business today is, quote, not healthy and needs a reset, with operating margins up to 10 times lower than competitors. More ahead here on the Asia Trade. This is Bloomberg.
We have breaking news out of Japan. We are now seeing the labor cash earnings year-on-year growth of 3.2%, which is below economists' consensus, also decelerating from the previous month. But we had seen some calendar effects with fewer working days this year for the month of May, so that might have dragged the number a little bit. The real cash earnings year-on-year is also growth of 1.4%, a deceleration also coming in below economists' estimates. But the ones that you also have to watch is a sample data, because this is the Bank of Japan's preferred measure, which strips out sample changes for smoother continuity. And we've actually seen that growth of 2.9%, beating economists' expectations for the month of May. Of course, this wage growth number, Heidi, very important when it comes to the Japanese markets, the economy as well, because we have seen already the 10-year yield hitting that 1996 high on just concerns that the BOJ may be falling behind. And let me not get started, even on the Japanese yen still trading at those 40-year lows against the greenback.
Yeah, the moves in the yen, the curve steepening have been really interesting when it comes to the sort of functions that we're seeing in the Japanese market, Brad. And I guess the question going into these wage numbers is whether it was going to make a meaningful difference, as important as they are to the outlook for the BOJ and therefore for the outlook for the yen as well. But take a look at the broader market setup. And we've been talking about this kind of return to the AI trade. We've got the geopolitical concerns seemingly out of the way now. And we're seeing investors really kind of seeking the next catalyst and the next catalyst after that when it comes to pushing this rally further. For today's session, they've gotten a bunch of them. One is the carry through from the tech rally that we saw overnight, and the other is, of course, the Samsung story, as well as SK Hynix headed for the ADR listing on Friday. So a lot of bullishness when it comes to that space, Shery. We're also watching oil that continues to kind of just trade pretty flat at the moment, but there are now this sort of the whipsaw expectations that perhaps with the return to supply, the return of the Strait of Hormuz to sort of consistent levels of transit, we may be talking about a glut situation there, certainly removing some of those hyperinflationary expectations for central banks too.
Yeah, and to your point, when it comes to that tech optimism, really being led by Samsung, right? That was going to be the major AI test this week before the SK Hynix U.S. listing later in the week. But we've seen the numbers, quarterly profits surging 19-fold. We're talking about 89.4 trillion won in preliminary operating income. That's around $58 billion. That's through the 3 months through June. This dwarfs its performance for all of last year. Of course, we continue to see the shortage in memory chips, so memory pricing remaining pretty strong. Let's actually discuss all of the results and bring in our next guest, who has a buy rating on Samsung and raised his target price to 580,000 won. With us now is SK Kim, Executive Director and Analyst at Daiwa Securities. SK, great to have you with us. Right now, when it comes to futures trading, we are seeing the downside. Is this more of sort of buy the rumor, sell the news, given that your price target is also kind of almost double the level that we're right now?
Samsung Electronics just announced the earning result, and actually the I think it's quite solid earning because of it should include some incentive. There's a provision for incentive for the first half this year. So if we exclude that, I think the actual OP will be over 100 trillion won. And also, we see more upside in the third quarter. And that also, if you look at Samsung, recently they see strong demand for leading edge foundry, so including Anthropic and Tesla as well. So yeah, and also the improvement in the business performance, including HBM4. And moreover, we anticipate some sizable shareholder return. This year is the last year for the 3-year term shareholder return program. So we expect sizable, the free cash flow, the returning to the shareholder, which will drive the share price in the second half this year.
Does your optimism about Samsung, how much of it lies with the long-term agreements that we have and potentially more stability in the long term as well? And how much does that play into this idea that we're seeing this structural change in the semiconductor industry, not necessarily just a cyclical recovery?
Yeah, absolutely. The multi-year LTA as something, structural, the change. So because of this time, the multi-year LTA is a minimum 3 years, so 3 to 5 year term-based contract. And also, well, according to our, the research, the Samsung has the largest capacity, the share for commodity. So the Micron already guided for some their details about the LTA, but I think the Samsung has more exposure So I mean, roughly about half of their, revenue shipment will covered by LTA. This will drive, the stable demand and the visible earning over the next 3 years, minimum. So that is it's kind of re-rating catalyst along with our anticipation of the in-end shareholder return.
The ability that Samsung has over working over memory foundry, also having advanced packaging as well, how does that play into this idea and new trend that we're seeing from hyperscalers designing their own custom AI chips? How does that position Samsung?
Well, I think, now the Samsung is securing their leadership position for HBM4 is along with the in-house, the foundry, the logic die. So I think that market will shift to the custom, based HBM4E, late 2028. But well, at that time, customer can choose their foundry supplier. But I think that Samsung will provide about 2 nanometer based logic die compared with TSMC's 3 nanometer. So we still see some competitive edge. And in terms of the cost and the performance, with the one, the one-step supply.
Talking about competition, we have seen those reports that Apple is perhaps looking at Chinese memory suppliers, given, of course, the incredible shortage that we're seeing right now. Can this eventually become a meaningful challenge to the likes of Samsung, SK Hynix?
Well, I think, the increasing supply from China, it should be some long-term, threat. However, if you look at the current market situation, now the LTA, it's all about the data center. So the thing is that data center demand will account for more than 60% of memory, for example, DRAM. And if we include HBM, that market will go to over 70%. So that means, the consumer demand, the smartphone and the PC, where I think that the revenue portion will be down significantly. So while the Apple and the smartphone customer they are important customer from memory maker perspective. However, if you look at the overall the industry, demand. So there's a much more, demand from the data center, AI. So, that is kind of also fundamental change in the overall the memory industry in terms of demand.
Yeah. So SK, before I let you go, SK Hynix having its U.S. listing later this week. What are you watching there in order to gauge, of course, also the demand and the enthusiasm around this industry, and perhaps what will be some of the challenges going forward?
Well, I think, ADR listing should be a very positive catalyst because now, there's a Micron is already there. So it was about 20% the valuation premium over SK Hynix. So we can easily the success or expect the success of the new share issuing the U.S. stock market. But maybe some dilution issue with the current stock in the near term. However, if you assume that the ADR, the share will be included in the index, such as, stocks index, NASDAQ index, there's a huge opportunity with the new, supply, demand from the global passive fund. This should be long-term positive for the stock.
SK Kim, good to have you with us, Executive Director and Analyst at Daiwa Securities, as we digest the strong results from Samsung. Also, really meaning positioning in the setup to the Asia trading session. Let's get back to Anthony in Hong Kong. So really another session of fireworks, perhaps, for the South Korea market. What are you watching?
We've got multiple sessions with multiple 5% swings, and that seems to be the new base case for Korea. And doesn't look like it's going to be very different today. You know, we had Samsung open very sharply weaker. It's kind of trying to get back. And this speaks to an implied volatility of a market that is in the high bracket, you know, for an extended period. Korean volatility has traded above 80 handle for pretty much the whole quarter, and it looks like there's no stopping. One reason for that is the momentum trade kind of globally has rolled over. So you saw that in the US, momentum is having its biggest drawdown since 2023. But on the other side of that, dispersion is picking up. So what works really works, but what doesn't really doesn't. And that's making things very difficult for momentum traders. But on the other hand, specialist stock pickers are doing extraordinarily well. We're seeing some second quarter numbers from hedge funds that are really strong based on really deep understanding of the tech cycle and specific picks. And this is going to be a problem for Asia as the tech trade widens out. Will memory continue to lead the market in the second half? From the looks of these results, it looks like what investors look for in memory, the expectations are so high that the go-forward expectation is now very elevated and hard to beat. So will the AI trade benefit further down the line in Taiwan or in China? That is an open question that comes from this Samsung result, and we move into the Hynix ADR with that question in mind.
Lots of problems facing Japan at the moment, be it you look at the yen, what's going on with the bond market, and that's despite nominal wages continuing that streak, the longest streak that we've seen since 1992.
Yeah, it's a very bifurcated market, to use that often misused word. But in Japan, it is actually true. You have multiple winners and losers from the same dynamic. So Japan's yield curve is very steep. But it's benefiting banks. But at the same time, it's causing a kind of a negative spiral on the yen, which impacts people's kind of livelihood, since Japan imports a lot of things. But at the same time, cash earnings are, as you say, tracking higher. So people's wages are improving. So it's a very complex Japanese picture at the moment. On the macro side, you have an explicitly expansionary policy from the government, a BOJ that is a bit more cautious than markets would like on rate hikes. That sets up really well for corporate Japan. For domestic demand Japan, the picture is much more mixed and probably corresponds closer to where you sit on the income spectrum. If you're a high wage earner or you're a very educated person that's working in technology, the Japanese economy looks perfect. If you are a low-wage earner and you're in the old manufacturing and you have to compete with the Chinese, it looks a little bit more difficult. And lastly, if you're a pensioner and you're depending on your yen purchasing power, life is getting increasingly hard. So it's a very, very disparate picture based on what part of Japanese society you are part of. For the markets, it increases dispersion. Again, so that the Japanese market is starting to look a lot more like the US than it has historically.
Markets reporter Anthony Stevens with the setup, and still ahead on the Asia trade. A former Japanese currency chief tells us why the yen is being substantially undervalued. Our exclusive interview with Tatsuo Yamasaki is next. This is Bloomberg.
Take a look at how Japanese assets are setting up for the market opens. We continue to see the weakness in the Japanese yen holding at that 162 level against the US dollar. Today, we'll be watching the bond markets as well, because we do have a 30-year JGB auction. That could be a key test for demand, because we are now seeing the 10-year yield at the highest level since 1996. A lot to do with the expectations of what the BOJ will do next. Many thinking that perhaps they're falling behind the curve. For example, we got the wage number earlier today, just minutes ago, showing the nominal wage growth really expanding above 3% for a fourth consecutive month. Now, that hasn't happened since at least 1992. So you would think the BOJ could afford to move right now. But since they're not moving, or at least they're being very gradual in their rate hikes, we're seeing the JGB space reacting, the Japanese yen also reacting. Goldman Sachs, in fact, just this week saying that the yen could end up at around 165 in a year's time, revising it from 155. So it could potentially become weaker and weaker. And still, I spoke to a former top Japanese currency official, and he's saying that the yen should be as much as 20% stronger than it is right now, at around 130 per dollar. That's even, of course, as the currency is still at around the 40-year low against the greenback. In an exclusive interview, I also asked Tatsuo Yamasaki about a possible floor for the yen.
I don't know, but I think the current yen exchange rate is substantially undervalued. And I think the deviation from the range, which reflecting economic fundamentals, I think more than higher than maybe more than 10% or 20%.
Oh, wow. Why don't investors and traders feel that way, that the yen is undervalued? Is this all about speculative positioning? Why are we continuing to see this pressure?
Yeah, I think that primary driver is speculative trade. And such speculators until recently argued that soaring crude oil future price is the main factor to depreciate the yen. But now it's falling down.
Right.
So that's now they are seeking for another three reasons. So first is interest rate gaps between United States and Japan is widening again. And second, Takaichi administration is probably opposing the further policy rate hikes. And the third, Takaichi administration is now shifting towards more expansionary fiscal policy.
Are those statements true? I mean, is what the markets believe actually something that's happening on the ground, in your opinion?
I think that all of these three scenarios or views are mistaken. Because as for the interest rate differentials, yes, BOJ's next move is definitely rate hike, maybe followed by several rate hikes. While FRB next move is still uncertain whether it is rate hike or rate cut. Even if it is rate hike, I think it is very likely just one-time event.
Despite fundamentals, markets and really market moves are about psychology, right? So if we continue to have this belief in the markets that the yen will continue to weaken from here, does any sort of FX intervention by Japanese authorities help?
The objective of the intervention is that to make the market convinced that the current direction is wrong. Current direction is further deviating from the economic fundamentals. Yeah.
And it's not about a level, because last time we had more than $70 billion or so used by Japanese authorities. We didn't see the Japanese yen break 155. That was a very difficult line in the sand, it seemed, where we wouldn't strengthen further. So how much is it about the pace of the movement of the Japanese yen, not necessarily about a threshold?
That is a very difficult question. But compared to the previous intervention, like in the year of 2024, when that Japan-US interest rate gap has started to narrow, but still yen continued to weaken. So the intervention was very effective. But now people are not yet convinced that the economic fundamentals is different from the current levels. So that's why, to make people believe that the economic fundamentals of the Takaichi administration's policy is more how it's called proving the stronger yen.
Will Japan need the help again from the United States in the form of Fed rate checks? And would that help?
I think that never before have the U.S. authorities so well understood and so well accept Japanese current intervention activities. So they are always ready to support us. But of course, it is different from if they make intervention by their own account. Because for them, to make intervention means they devalue their own currencies, which is they have been criticized to other countries like China. So it's very difficult.
But even if they were to support Japan, for how long, especially since Japanese authorities also potentially need to sell more treasuries, right? Which would actually push up U.S. yields, which the U.S. probably doesn't want to see.
But you know that the current level of the Japanese foreign reserves is more than $1.3 trillion, which is 200 trillion yen. That is more than enough. So without impacting the U.S. Treasury bond market, Japanese authorities can freely make intervention.
Former Japanese Vice Finance Minister Tatsuo Yamasaki speaking to us exclusively at Bloomberg. And if you missed any part of that conversation, check out the Bloomberg Video Hub. Subscribers can explore also live streaming, news, interviews, all of our Bloomberg TV shows, reporter analysis, and much more. Check it out, bloomberg.com/videos. More ahead. This is Bloomberg.
Take a look at what we're watching. It's going to be one theme as we head into the start of trading in Japan and Korea. But really, this is just about one market in terms of the highlight, and that will be the Kospi, given that we are watching both Samsung and SK Hynix. Samsung scoring the profit beat on really, truly runaway demand for AI memory products. The quarterly profit surging due to the demand for these chips for AI data centers. We saw 89.4 trillion won as that preliminary operating income, then revenue more than doubling, beating expectations as well. So investors that are looking to try and justify high investments and valuations around AI will be looking to the details for this in that session. We're also watching SK Hynix there with that US listing offering, the formal marketing process for its ADRs, representing $28 billion in that listing there. Take a look at the broader markets, though, as we continue to set up a bit of a divergence. We do expect some weakness here in Australia, given the lack of those tech names and the weakness that we continue to see from oil. The market opens in Sydney, Seoul and Tokyo are next. This is Bloomberg.
This is Asia Trade. We're counting down to Asia's major market opens with a little bit more positive sentiment when it comes to the AI trade, Heidi. Of course, in the overnight session, we have the tech rebound with the Philadelphia Semiconductor Index halting 2 days of losses. And early in the Asia session, Samsung's strong results.
Yeah, these are the catalysts that investors that are kind of desperate for that next move higher will be looking for, right? You spoke about the Samsung numbers, revenue really impressing and beating expectations. So those investors are looking for justification of the enormous amount of spend and investment will be taking some positivity away from that. Also got the SK Hynix story too, right, Shery? When it comes to looking ahead to the ADR listing, the marketing process has begun. In Japan, it's quite a complex setup.
Yeah, especially since we have a lot of those tech names, semiconductor-related names, equipment makers, chemicals as well, and those exposed to the artificial intelligence trade. Take a look at the Nikkei and the topics diverging a little bit early in the Asia session. But what we'll be watching today is also the JGB space, because we do have a 30-year JGB auction. Of course, we have already seen the 10-year yield touching the highest level since 1996. Now, there are fiscal concerns, but there's also perhaps a sentiment from markets that the BOJ could be falling behind the curve, especially on a day like today when you do have wage growth numbers and you're seeing 4 consecutive months of wages gaining ground by more than 3%. That's the longest streak we've seen since 1992. So this idea that the BOJ perhaps is not moving fast enough to hike rates, plus every other thing that's happening around the equity rally that we're seeing in Japan, Forex hedging perhaps also pressuring the Japanese yen, and we're still stuck at that 162 level against the US dollar, which is, of course, around the weakest levels in about 40 years or so for the Japanese FX space. We saw Goldman Sachs already revising its forecast 1 year out of the yen at 165 instead of 155. Take a look at how South Korea is coming online, because the Korean won, of course, is another currency where we're seeing incredible pressure despite the rally that we've seen in the stock market. Right now, we're seeing the tech-heavy Kosdaq losing more than 1.5%. In fact, a little bit of perhaps buy the rumor, sell the news, because we're seeing Samsung Electronics now falling more than 3%. Also, you have to keep in mind, right, Samsung has been up more than 160% this year already. We're just in July at the moment. And we have seen strong results, though, Heidi. We're talking about their quarterly profits surging 19-fold.
These numbers are just almost difficult to compute, right? Pardon the pun. If you just take a look at the expectations that just continue to get built despite quarter after quarter of blowout numbers. But let's take a look at some other parts of the market that we're watching as well. Treasuries, the bond space is really interesting at the moment, particularly when it comes to this recalculation of Fed expectations. At the moment, we're seeing short-term treasuries seeing a little bit of upside there in the previous session, outperforming the longer end. Certainly, traders seeing that Fed Reserve less likely to raise rates following that weaker than expected jobs report. But of course, we're also seeing some positioning going into the FOMC minutes as well. We also had a mixed survey showing that the services sector expanded slightly slower in June. Firms increased hiring, cost pressures though continuing to ease there. When it comes to oil, this conversation around whether there's a concern around a supply glut situation continues to build. We are seeing Brent crude coming online about 0.2% higher. The traffic through the Strait of Hormuz continues to pick up. We also had Saudi Aramco, the state producer for Saudi Arabia, lowering Arab light oil to Asia by $11 a barrel to just about $1.50 below the regional benchmark there. Brent now, I should mention, having fully erased that war premium that's been built up since February. But, Shery, all of this is sort of almost just background noise as we continue to really focus on that AI tech trade in the session.
And what really Samsung means for the broader industry, right, especially given that we're headed towards the SK US listing as well later in the week. Let's bring in Asia Equities reporter Sang-Mi Cha to discuss what's happening with Samsung. So can you break down the numbers for us? Because at the moment, we're surprised that despite this huge beat and strong earnings, we're actually seeing pressure on the stock.
That's right, Shery. Samsung investors have become very increasingly hard to please after these earnings. That's because the consensus already has been quite solid. A lot of the investors have been predicting that Samsung will already have very strong earnings for especially this quarter that we have seen. And all of this points back to, of course, the DRAM price hikes and the NAND price hikes. We have seen about 40% hikes between the April and June quarter for DRAM, and then 50% upgrade for NAND. So you can already imagine that the Samsung and its rivals like SK Hynix and Micron already have this huge pricing power when it comes to these memory chips that are in the middle of this AI choke point. And this is, we're seeing a huge bottleneck here in build out of AI space, and memory chips all point to that choke point right now.
And we're just going to get the breakdown of those results from Samsung later in the month, right? But as you said, what does it really tell us about the broader sentiment in the tech space, especially given that we've seen this sell-off on and off for weeks now?
Yeah, so when looking at the quarterly results, we're seeing the operating profit that has, we're seeing about $58 billion, and that is definitely a beat to, looking at the consensus, which was about $55 billion, and that's even on top of a lot of the bonus payouts that was always in the top of the mind for the investors. So that dwarfs what Samsung has made in terms of operating profits in the entire 2020 2025. And now the focus will be towards the end of this month when SK Hynix will also be reporting earnings. And the whole point will be whether how much of the sustainability and the durability of this AI chip space, and especially the pricing power that they hold, if this is going to continue, that will be the key. And if the cash flows that they have, where it is going to go, and the investments that they have in plan.
How do they compare with other rivals? Of course, we have that SK Hynix U.S. listing later in the week as well.
SK Hynix U.S. listing is one of the key events. Friday, we're going to be seeing the $28 billion U.S. listing, and that will be a boost for the stocks onshore for SK Hynix, of course, given that it will definitely help narrow that valuation gap that it has with Micron. And again, that will be a test to investors, whether outside of just the passive funds that goes and follows NASDAQ 100, it's also going to be a test to whether SK Hynix and the Korean memory makers can really stand on this world stage of the memory chip rally, and then whether this rally can continue through Samsung earnings and, of course, the SK Hynix U.S. listing.
Asia equities reporter Sang-Mi Cha there. Well, our next guest says that AI scarcity remains their highest conviction theme. Joining us now is Wei Li. He's a global chief investment strategist at BlackRock. Really great to have you with us. So tell us about, as we see the sort of ratcheting up of this rally that has run so fast and so far already, where are you finding opportunities within the AI and chip space now?
What we have seen so far is that if we focus on scarcity and bottleneck, we have been able to achieve higher return with lower dispersion relative to trying to identify winners in the application layer. As we look at the incremental margin of the tech sector, here I'm talking about the U.S. market, but broadly this applies as well. Incremental margin is still higher than operating margin. That suggests to me that we're still early on in this AI super cycle, but how we play it will be important, and we continue to think that focusing on bottlenecks, scarcity is a higher conviction trait than trying to identify winners at this stage.
You're overweight US equities. Is that a more preferential strategy compared to, say, Asian options?
For now, we are, yes, overweight U.S. equities because of the combination of leading chips, leading models, energy independence, and also the depth of its capital market. We have been overweight emerging markets equities for most part of this year. At the mid-year point in the mid-year outlook that we just released, we decided to take some profit by going neutral emerging market equities, and currently that includes Asian equities as well. We still believe that the fundamentals are very strong. We just saw the earnings coming through, but the focus here on is also about kind of volatility of the underlying market, and we have seen spike up in volatility. So from a risk-adjusted perspective, we do want to take some profit, but Asian equity markets sit at the intersection of some of the key scarcity and bottlenecks. We definitely want to be exposed to that. And the next big thing in AI is physical AI that has important implementation strategies in Asian markets too.
Where do you see those opportunities when it comes to physical AI? Because we know that China, for example, is one of the leaders in the markets, but we also have some big names here in Japan as well.
Well, you talked about these two markets, China, Japan. They have big roles to play in physical AI, and here we want to focus on bottlenecks too. We don't need to know which robots is going to win to actually know that physical AI is going to need batteries, is going to need sensors, is going to need robotics and general industrial manufacturing capabilities, and a lot of that sit in Asia. particular. But one thing I would say is that because of pricing competition and what that means for return on equity, we do believe that this is an active space to play, and being selective is very important in this space, which is why broadly we're neutral Chinese equities, for example, but we do think that there are important selective alpha opportunities to be taken advantage of. And physical AI has a play in the US as well.
Willie, staying here in Japan, because today we're watching the JGB space very closely, especially given that we have the 30-year JGB auction. We've seen incredible highs for yields, 10-year yield, 1996 high, the 30-year yield we're watching very closely, as well as we've reached record highs this year as well. How cautious are you on long-end yields given the inflation picture, given the BOJ?
Right now, we're underweight JGB, Japanese government bonds in particular, because of the policy direction of travel and also the reflation trade, specifically what that means for the government bond space. We prefer equities in Japan over government bonds. But then more broadly, I think what is happening in JGB market speaks to the broader trend of a higher for longer that applies for Japan right now, but that applies to the US and a large part of developed markets too. This is an environment where income has become very attractive because we're in a high for longer environment. So locking in some of those income and quality income has become more abundant as well. So one of the key themes in our media outlook is durable income, and Asian government bonds have a role to play, but quality credit globally have a role to play as well.
Yeah, the idea that the bond market maybe is not the safe haven that it once was, is that playing into your investment ethos at the moment as well? Because you talk about on the longer end, they're not really the preferred diversifier anymore.
That's right. What we have seen so far is that balanced properties of long-duration government bonds have decreased quite meaningfully during periods of market volatility because of the pent-up inflationary pressure in the new regime in this world shaped by supply constraint. So specifically in the U.S., we prefer front and belly of the curve over the long end of U.S. government bonds. And then more broadly, we think that international bonds have an important role to play from an income perspective. So in this media outlook release, we have upgraded emerging market dollar EMD to really take advantage of that. So generally, what government bonds have lost in diversification, we believe that they have gained in income, and it has a different role now in portfolios because of that.
Wei-Li, really good to have you with us, Global Chief Investment Strategist at BlackRock. And as we were talking about these yields, especially here in Japan, JGB yields at multi-year highs, 1996 highs for the 10-year yield. We are headed towards a 30-year JGB auction. So not surprising, you're seeing Topix Banks Index gaining ground again for 6th consecutive session. And we're talking about the highest level since 1996. We're also following, of course, everything related to the AI trade, whether it's Tokyo Electron equipment makers or Kioxia because of the memory play. We just had strong results from Samsung, but that sell-off on Samsung stocks continuing. But this after 160% gains for the Samsung stock this year, and Kioxia more than 300% gains for this stock in Japan this year. We have more ahead. This is Bloomberg.
Oil has hit fresh 5-month lows as Saudi Arabia makes the biggest cut to its flagship crude prices in at least 26 years, the latest sign of a glut in global markets. Our Bloomberg oil trading reporter Rong Wei-Neo joins us now. So the fortunes have shifted very, very quickly, and this narrative has changed, right? Just weeks ago, we were talking about the inflationary pressure of higher oil prices and a lack of supply. The pendulum has really swung in the other way.
right? And that the way that the market is swinging is evident in oil prices today. Now, of course, these couple of days we have been talking about a potential supply glut that's coming out to the market, and the latest official selling prices offered by Saudi Arabia is testament to this impending supply wave. Now, of course, the Saudi Arabian sellers, they have reduced official selling prices by some of the biggest cuts we have seen in years, and that goes to show how much oil they're trying to bring out into the market, and as well as how much effort they're putting in to make these barrels more attractively priced to buyers. Now, of course, this comes after we have seen oil prices spike to record highs during the war. And even with these massive cuts, Asian buyers here still tell us that perhaps prices of Saudi Arabian oil still remains high. So we could perhaps expect further cuts further down the road if, of course, producers like Saudi Arabia as well as other OPEC producers continue to target to produce more oil, which is what we have briefly covered, the conclusion of the recent OPEC meeting over the weekend.
Ronwei, how I guess the question is a lot of the uncertainties when it comes to these ongoing peace talks as well, right? We could very quickly see a situation change when it comes to the Strait of Hormuz. Are markets kind of essentially discounting this risk now?
Right, so on every estimate, a lot of analysts as well as banks that we speak to, they all do expect that transit through the Strait of Hormuz is expected to pick up either at a fraction or close to pre-war levels. Of course, like you mentioned, all of that is, it really hinges on the progress of the peace talks. And in the past couple of days, we haven't seen much progress. That's because the Iranian side, they've kind of essentially took a pause as the funeral procession for its former supreme leader is in process at the moment. And if we look to the Strait of Hormuz, even though what one expected outcome from these talks is that there could be a free passage through the Strait of Hormuz, but it's unclear what kind of mechanism this is expected to take shape. Now, for instance, right now in the Strait of Hormuz, there is, think of it like a highway that's essentially two lanes, one that is managed by the Iranians, one that is managed by the Omanis. And in the past couple of days, we have seen that there have been transits, multiple transits through the route managed by the Iranians, with the most recent example being a convoy of at least 8 ships that were managed by a Japanese firm. But comparatively, on the Omani side, it seems like traffic has slowed. So this is one clear sign that perhaps things may not be that simple in terms of resuming commercial traffic through the Strait of Hormuz. And we'll have to wait a couple more days to see how the talks progress and to see what kind of mechanisms are actually put in place to kind of manage the commercial transits coming out from the Straits.
Bloomberg oil trading reporter Ronwei Neil there. The top global headlines that we're following this hour, and prosecutors have told the impeachment trial of Philippine Vice President Sara Duterte that they have adequate evidence to convict her on allegations of corruption and threatening the life of the president. Her trial began on Monday amid tight security with some 6,000 police deployed to the Philippine Senate. Duterte did not attend, but a defense team called the charges baseless. Chinese state media say floods triggered by Typhoon Maysak have forced around 48,000 people from their homes in the southern Guangxi province. 2 people were reportedly killed. The National Meteorological Center expects heavy rain to continue until Wednesday across parts of southern, central and eastern China. President Trump has confirmed he called FIFA chief Gianni Infantino to review the World Cup red card suspension of the US star Folarin Balogun. FIFA has not explained why it overturned the suspension, but Infantino told a German news agency Trump's call did not influence that decision. Balogun is in the USA's starting lineup for today's knockout round of 16 match after FIFA also rejected Belgium's appeal against the decision.
Yes, I asked for a review by FIFA. I spoke to a man who's highly respected, and by the way, whose level of respect has gone up tenfold. And he was good before this started, but You know, he really pushed it in this country. I'm the one that got them to do it.
Let's get you to live pictures of Washington in the US, where these football fans are gathering to watch the US national men's soccer team facing Belgium in the round of 16 of the World Cup. At the moment, the scorecard is maintained at Belgium 1 against the USA 0. And as we mentioned earlier, Valorant Balogun in the starting lineup for the US in this World Cup clash with Belgium after that somewhat controversial reversal by FIFA of the suspension of his one-game ban. The disciplinary committee enacting a clause that gives it discretion to suspend any punishment and made him eligible for the match with Belgium. We have seen quite a bit of criticism, particularly from Belgium, with the Football Association criticising that decision and asking it to be reconsidered. More ahead on the Asia trade, this is Bloomberg.
A former top Japanese currency official says the yen should be as much as 20% stronger than it is at around 130 per dollar. That's even as the currency hovers at around 40-year lows. In an exclusive interview, I also asked Tatsuo Yamasaki about a possible floor for the currency.
I don't know, but I think the current yen exchange rate is substantially undervalued. And I think the deviation from the range, which reflecting economic fundamentals, I think more than higher than maybe more than 10% or 20%.
Oh, wow. Why don't investors and traders feel that way, that the yen is undervalued? Is this all about speculative positioning? Why are we continuing to see this pressure?
Yeah, I think that primary driver is speculative trade. And such speculators, until recently, argued that soaring crude oil future price is a main factor to depreciate the yen. But now it's falling down.
Right.
So that's now they are seeking for another three reasons. So first is interest rate gaps between United States and Japan is widening again. And second, Takaichi administration is probably opposing the further policy rate hikes. And the third, Takaichi administration is now shifting towards more expansionary fiscal policy.
Are those statements true? I mean, is what the markets believe actually something that's happening on the ground, in your opinion?
I think that all of these three scenarios or views are mistaken. Because as for the interest rate differentials, yes, BOJ's next move is definitely rate hike, maybe followed by several rate hikes. While FRB next move is still uncertain whether it is rate hike or rate cut. Even if it is rate hike, I think it is very likely just one-time event.
Former Japanese Vice Finance Minister Tatsuo Yamasaki speaking exclusively to Bloomberg. Today here in Japan, we're also watching the JGB space. As the 10-year yield now at 1996 highs, we're seeing Topix Banks Index gaining for a sixth session. We do have a 30-year JGB auction. This is Bloomberg.
Take a look at what we're watching when it comes to oil prices, and we do have some developments when it comes to just underscoring the level of volatility and uncertainty in these crude markets. Of course, we have seen vessels going through the Strait of Hormuz with relative consistency, but we're now seeing reporting from Axios that U.S. officials saying that Iran has fired at least 2 missiles at ships in the Strait of Hormuz when it comes to what we're seeing at the moment. This is a picture for price in New York traded crude, up a little bit, just a touch, 0.3% higher. We're seeing Brent trading higher, about a quarter of 1% that as well. But we have seen Brent now, just the latest price gauge, to raise all of those war premium gains that we've seen since about February. So the market very much positioning for the continuation of flows going through the Strait of Hormuz, a continuation of what we're also starting to see in terms of the market repricing from the likes of major players in Saudi Arabia, Saudi Aramco, when it comes to its Arab Light pricing. That discount that we've last seen those sorts of discounts back in 2015 and the previous price war as well. So that all of this is sparking some concern on top of OPEC Plus also agreeing to return more supply to the markets, sparking this concern, Shery, that we could see the start of a glut situation for supply rather than, of course, the last few months being preoccupied by the energy crisis, the shortage and the impact on inflationary outlook as well. We're also watching gold looking a little bit softer at the moment. Of course, we do have that resurgence in the US dollar as well, Shery.
Yeah. It's been really a quick turnaround of that narrative, right, in the oil space. Let's get back to Anthony Stevens for more on the markets. And Anthony, I know that we haven't necessarily talked a lot about oil recently, given that we have so much in tech happening at the moment. But what are you watching now that we're headed into the later hours in the Asia session today?
Yes, there's two things. One is we need to watch this oil situation for spot oil to react, right? Like the situation in Hormuz is relatively kind of in flux, and if it materially worsens, then oil does become a problem. But as long as the ships continue to flow through the strait, it doesn't seem to be front and center for markets. What is front and center is the tech rotation, the rotation out of tech and into other parts of the economy. The Samsung result has kicked off quite a violent bout of that rotation this morning. We see banks in both Japan and Korea trading very strongly as both these countries look to curb currency weakness and probably raise rates. The yield curve in both countries are quite steep. So you start to see the banks and industrial sectors in these countries do really well. And on the other side, the Samsung results are weighing on tech. You're seeing significant weakness in the tech space in both Japan and Korea, while banks are up. Now, that could be mirrored in China. In China in particular, we saw the Chinex and the Star 50 index have a really rough couple of days after the Meta kind of a compute rental story started to come out, and whether that continues to play out in China is very important, given that has been the safe corner of the Chinese equity market. We are seeing a little bit of strength in the big China internet space. Tencent in particular has been strong as it releases a new model. So again, in the Chinese trading session, it's going to be more about rotation in and around the tech trade. But we will have to keep a close eye on these headlines out of Iran.
Anthony, it's interesting that you talk about these expectations for China tech, right? Because we are starting to see some signs of a broadening of this market.
Yeah, I mean, as the Chinese economy kind of looks to turn around the corner and get kind of some stability in the housing market, in the consumer spending, then you can start to see a more broad rally. Chinese banks have actually done really well as a defensive dividend play. And that has really started to stand out in the last few sessions. The dividend protection and the low volatility protection are things that people are starting to rotate into after making some money on the tech trade. So you see Chinese stock investors are very quick to move. You know, they have long memories of things changing very fast in the Chinese market. And you've seen this rotation into low volatility, high dividend plays. That is not particularly a sign of a really good bull market. But at the moment, that kind of rotation is keeping interest in Chinese markets very high, even though China does not have as easy a read-through to US AI as the Korean and Japanese markets do.
Our markets reporter Anthony Stevens there with the latest on that tech rotation. And to Anthony's point, let's actually break down what's happening in Chinese equities, because we are seeing investors show that preference for laggards from healthcare to consumer firms. Let's bring in Lian Ting Tu, our managing editor for Asia Equities. Lian Ting, so can we expect this sort of rotation in China tech to be sustainable? What metrics are you watching?
Yeah, I mean, I think right now it's probably too early to call the end of the AI trade given the ongoing rotation. But investors are clearly becoming more selective. AI-related stocks have delivered enormous gains this year, as Anthony mentioned. If you look at Star 50 or Chinex, that has pushed valuations higher and raising expectations ahead of earnings season. So as a result, investors are taking some profits and moving into sectors, as you mentioned, that are cheaper and potentially less vulnerable to disappointment. So that includes healthcare, consumer stocks, and brokerages. And this is playing out not just in China, but globally, as well as we enter into the second half of the year. In terms of key metrics that people are watching out for, it's really about the upcoming earnings season, whether they can justify the current AI valuations. If the results are just merely meeting expectations rather than beating them, then I would say investors may continue to favor areas of the market where expectations are lower, where performance has been weaker.
Lianting, it's been interesting, right? Because so far we had seen the outperformance of tech hardware stocks in China over, say, internet e-commerce names like Tencent, for example. But now that we're seeing this broadening out of the rally in China, can we expect it to signal some sort of next phase when it comes to the artificial intelligence boom there?
Yeah, what we're seeing right now would suggest that the market is moving from excitement to execution focus. For the past year, investors were willing to buy AI-related stocks largely on the promise of future growth. Now they want proof that companies can translate that optimism into profits. The encouraging sign is that some early earnings guidance from mainland memory chip and optical networking companies actually remains very, very strong, with that reflects very strong AI demand, but expectations again have risen so much that strong results alone may not be sufficient. Investors increasingly want evidence of sustainable earnings growth or signs of no slowdown of very strong continued demand. So the next phase of the AI trade is likely to be driven less by narrative, but more by fundamentals, which could lead to greater differentiation between the winners and losers in China.
Managing editor for Asia Equities, Lianting to that. And Shery, it seems like every day we're continuing to talk about the worries in the private credit space. And now possibly some good news. I'm very cautious on that, but there could be some signs that we're seeing some of that skittishness from investors in this space starting to finally ease, at least when it comes to KKR's private credit clients. We are seeing that redemption request sort of volume start to slow down. They got back all of their requested cash in the second quarter. 1.65% of outstanding shares is what we were looking at in terms of those repurchase requests. So the KKR-FS Income Trust receiving those requests well below the 5% limit there, according to a regulatory filing earlier this week. It also said that those were met in full as well. They tried, in comparison, in the previous quarter to redeem at 6.3% of shares. They had to prorate requests at about 80% in that period. But this is perhaps an indication that at least some parts of this space might be starting to ease, given that in the second quarter we saw that escalation again for a lot of other asset managers, Apollo, Blackstone, for example. We're still seeing that pressure when it comes to Blue Owl Capital. The private credit funds hit again with some of the industry's largest redemption requests most recently. So, Shery, perhaps not across the board, but possibly a little bit of alleviation of the pressure in some parts of this sector.
Yeah, I mean, you were right in being cautious about the optimism there, because I'm actually going to bring you some of the negative pressure still that seem to lie inside the markets right now. Of course, private credit has been a little bit difficult to understand, but Bloomberg has looked into the data from mutual funds that also hold some of these same software companies the private markets have invested in. And remember, it's been this... retail investors being spooked about not only credit quality, but also just the exposure to AI disruption that has led to a lot of volatility in that sector, right? And now, according to data, private investors could be sitting on tens of billions of dollars in paper losses. For example, Databricks, backed by BlackRock, Tiger Global Management, in the first 3 months of the year, mutual funds reduced their value by an average of 16%. We saw the likes of Canva, for example, be marked down by 15%. In fact, Bloomberg News looking at how mutual funds assess the value of nearly 50 private software companies across hundreds of portfolios. On average, they were marked down by 20%. Some were slashed by more than 50%. So you can see right there the pressure from all of the jitters around artificial intelligence disruption.
Shery, Hong Kong, in the meantime, hosting the FIC and Bond Connect Summit on Tuesday. Policymakers and regulators gathering to discuss the city's fixed income and currency markets, as well as China's onshore bond market as well. Our China correspondent Min Min Lo is there. And Min Min, what are we expecting today?
Yeah, we are potentially going to expect a slew of policy announcements because just moments ago we understand that the Shanghai Gold Exchange has announced that it's officially accepted the Hong Kong Precious Metals Central Clearing Company as a member. Now this implies that the gold clearing system in Hong Kong is about to be launched. Now we're still waiting for official announcement from the government here. Potentially we'll hear some headlines momentarily, but it is going to be a packed day of agenda. We have the PBOC Governor Pang Gong-Siong expected to speak in about 10 minutes from now. Paul Chan, the Financial Secretary, expected to speak this afternoon as well. And this is an event to mark the anniversary of the launch of the Bond Connect back in July 2017. So we might hear perhaps more announcements about enhancements to the Connect program, whether it's the Bond Connect, the Swap Connect, or the Wealth Management Connect, because we know the Hong Kong government has been in discussion with mainland authorities, for example, to lower the entry threshold and to increase the quota, increase the products that are included under the Wealth Management Connect, for example. And of course, expanding offshore use of the yuan is going to be a major theme because the Hong Kong Chief Executive John Lee just met with the PBOC Governor Pang Gong-Siong to discuss financial services. And according to a government statement, they did discuss the offshore use of yuan funds in Hong Kong, as well as enhancing two-way capital flows. This certainly is going to be important as Hong Kong has now really capitalized on its standing as a global financial center. It's just signed, Hong Kong MA just signed an MOU with the PBOC and Bank Indonesia to promote the use of yuan in trade financing. This is potentially something that could spread to other regions, other countries in the region as well.
I mean, in terms of these ambitions by Hong Kong to launch the gold clearing system, what's driving the timing of this? And I guess it supplements the goal of the broader goal of yuan internationalization for Beijing.
Yes, timing is absolutely critical because Hong Kong is in a race against time with Singapore, which just last month also announced its own ambitions to launch a gold clearing system before the end of the year. So Hong Kong is running ahead of time to launch it first as well. Both cities, Hong Kong and Singapore, wanting to be that bridge between West and East. And I think one advantage that Hong Kong has is that of the 11 banks that are now on the board of the Hong Kong Clearing Company, 5 of them are mainland Chinese banks, including the Bank of China, the ICBC, the Agricultural Bank, for example. So it will truly be able to serve as that gateway, right, for mainland Chinese investors to access international capital and for international investors to access onshore sort of opportunities. And of course, Hong Kong has also announced it wants to increase its gold storage capacity to 2,000 tons in 3 years' time. And already we're hearing that many of these banks, some of them are already increasing the imports of these 400-ounce gold bars to Hong Kong to build up their reserves in anticipation of this gold launch for the time when they need to deliver physical gold bars to execute some of these trades. And this is meant to mirror the financial infrastructure in London and hopefully work towards having Hong Kong be able to set prices in gold instead of taking prices from New York and London.
Bloomberg's Min Min Lo there joining us from Hong Kong. Take a look at some of these big movers in the Asia session. We have 2 of them in South Korea. Hanwha Ocean dropping more than 20% at one point. This is, of course, after failing to win a Canada sub deal. Canada choosing ThyssenKrupp Marine Systems as a preferred supplier to build up to 12 submarines for Canada's Navy, beating out South Korea's Hanwha. And you can see the losses of more than 20%. LG Energy Solution also dropping more than 5%. The preliminary second quarter earnings missed analyst estimates, but saw some lackluster markets like the U.S. when it came to electric vehicles. We have more ahead. This is Bloomberg.
The cost of managing AI is changing every quarter. but I don't think that's an unmanageable problem. At the same time, you have questions about are seat counts going to remain strong? Are businesses going to continue to grow? Again, I'm incredibly bullish that AI will actually grow the total number of white-collar workers, the creativity, the outcomes that have continued to be shown.
Atlassian CEO Mike Cannon-Brookes there speaking to us about the outlook for AI, and Australia is emerging as a preferred location for AI data centres. The Financial Review reporting that Anthropic is preparing to make the country its second home for training its AI models ahead of its IPO. The US startup reportedly seeking 1.4 gigawatts of capacity, equivalent to the entire Australian industry's capability as of the end of last year. Let's talk about the opportunities with our next guest. John O'Mahony is the partner at Deloitte Access Economics. Great to have you with us. So it's really interesting, the timing of the Anthropic news, of course, but it just sort of adds to the evidence of how much demand there is.
It's already happening now, Heidi. We're already seeing it's not just an opportunity. The scale of investment in data centres in this country is very significant. It's as big as what Australia experienced a decade or two ago through a mining boom. We're going through a data centre boom at the moment. Just to give you a couple of figures, the amount of capital investment in this country that's now going through technology has doubled from 5% to 10% of the total. We had one quarter earlier this year, Heidi, where we had over $10 billion US straight into data centres in this economy. So it's a very significant change for us.
Are you of the opinion that that opportunity will be seized upon?
Well, we describe it as being a sliding doors moment for the Australian economy, because there are a lot of strengths for Australia, for investors, whether it's about access to land, about the renewable energy opportunity, the talent that we have in Australia for artificial intelligence and what it means. But we're also aware that investors are concerned about whether or not they will get the approvals in time that they need to seize the opportunity. And of course, Australia is competing with Singapore, Malaysia, Japan, India, to being one of the data centre hubs for the Asia-Pacific region. So with the right policy support and the right conversations with investors, we think this can be the next big economic opportunity for Australia, but time will tell about whether we'll seize it.
What's really interesting, we had a conversation recently with a very well-placed consultant coming from the US who was here for talks pertaining to these opportunities. And there's a pretty kind of bearish view as to whether it will eventuate, because there's a sense of like it's just not going to happen because nobody wants these data centres. There's, you know, NIMBYism, as you will, and that our government is eventually going to have to heed those more populist concerns, right? Is that the biggest risk?
It's the most significant risk is that causes delay. Those are issues that can be worked through, but the question is, will Australia resolve them in time for the investment to happen now? Because if we miss the opportunity, it goes elsewhere, well then the opportunity mightn't be around in 4 or 5 years. What I think will help with that is guidance from the Australian government called the Data Centre Principles, and this is an invitation for investors to say, come and speak to us about how you'll meet our requirements around using renewable energy infrastructure, not putting a burden on local communities, and helping to build the artificial intelligence ecosystem around data centres. And then this country wants that investment. So I think that there are enough messages from government to keep investors interested in Australia.
You talk about green compute, and you mentioned the sort of environmental concerns. A lot of the concerns at the moment globally is about the energy suck, right? Does Australia have the infrastructure capability and the policy framework to be able to address those worries?
We don't have the energy at this stage, but we do have a framework for attracting the investment. So one of the key data centre principles is that we are building out the renewable energy capacity in this country. We think that the data centre boom can help the transition, because by having long-term contracts, it can provide more certainty to renewable energy providers as well. So there is an opportunity there, but there's a coordination challenge for the Australian economy.
Is there an ideal investment model? Are these PPIs that you're thinking of? Is it going to be more private investment? How big a role should the government have in this, do you think?
For government, it's mostly about getting the policy settings right and encouraging the investment. After that, the government already has its state-owned corporations in energy and water who are the right partners for hyperscalers or other investors in data centres to be able to get the energy and water needed for this scale of investment. So we do feel as though there are regulators and state-owned corporations that can participate in that. It's not as though the government has to directly invest, but it has to provide the right policy framework, and it's also got to encourage the investment, because for Australia to compete with other regions, it's going to have to require ministerial level interest in this investment. But we've already seen that before when there have been big investments in Australia, whether it's the Minister for Communications, the Prime Minister, the Treasurer, they've been part of the announcements as well.
I suppose, would it make it more appealing if there was more a public vested interest? Because obviously the criticism of the mining supercycle, for example, oil and gas, talks about tax revenues not benefiting the public purse. Is that an opportunity that structurally the government should make more of here, if you're saying that this is the next big thing comparable to what we saw with the mining boom?
Yep. Taxation is absolutely part of the conversation. We think the biggest thing for governments to get right, to demonstrate the benefits to the Australian community, is about the broader AI ecosystem. So yes, it's data centres, but what sits around that? Whether it's the submarine cables, the enabling telecommunications infrastructure, and then building an ecosystem with more AI startups in this country, supporting research institutions, attracting talent so that we have the high-skilled, high-wage jobs that data centres can help enable. So it's not just data centres, but it's a whole transformation for the Australian economy.
John, really great to have you with us. It was really insightful. John O'Mahony, who's a partner at Deloitte Access Economics. And we do have more on Australia Ahead every Tuesday at 10:40 a.m. If you're watching here in Sydney, 8:40 a.m. in Hong Kong. More ahead on the Asia trade. This is Bloomberg.
Samsung soaring in profit, failing to ease investors' concerns about the AI boom, which has already sent the Samsung stock higher by more than 160% this year. We're seeing other memory makers across the region, including Kioxia, losing more than 7% today. That's it from the Asia trade. Our markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai, and Shenzhen. The China show is next. This is Bloomberg.